There have been a rash of some big name stocks that are hitting 52-week lows, and some of them are controversial. Some of them you didn't even know were anywhere near close to 52-week lows, but we got to discuss 5 of the big ones today. So I'll tell you if there's a massive opportunity, if it's a huge trap, and just basically discuss those stocks in general today. And yes, I'm still feeling the effects of our Vegas event from a week ago, but I can't talk about it, guys. What happens in Vegas stays in Vegas. And that's one of the benefits of being in our group, is events just like the one we just had in Vegas. So be on the lookout for something special that's going to drop very, very soon. Now, back on track with this, I honestly don't care about 52-week highs or 52-week lows that we're going to talk about today. And that's simply because a stock can be at a 52-week low and still be significantly overvalued. That's why valuation is so important, guys. I know some out there want to say, oh my gosh, it's at a 52-week low, what a steal deal. That's not actually true. That's where valuation comes in. We have seen stocks before that have fallen 50%, 60%, 70%, and still be significantly overvalued. That happens in the stock market more often than you'd think it would happen. And same thing with a 52-week high. A stock can get significantly beaten down, kind of like Meta was last year, right? And then as it comes up, it hits a 52-week high, but it's not really even back to fair value yet in some cases, depending upon the stock. So you got to kind of keep that in mind whenever I see 52-week high, 52-week low. I don't really think a lot about it. However, in this case, some of these names are really big, and they're definitely stocks that a lot of people out there in retail land, you and I, us, the small guys, are looking at. So I wanted to make sure we talked about the top 5 that I saw out there so we could basically have a discussion about them and see, is there an opportunity or is this just kind of fool's gold in the end? And actually the last stock, I'm not sure I've ever talked about before here on this channel, but I know it's one you guys have asked me about before, so we've absolutely going to discuss it today. But let's start with the first stock, and that would be General Motors or GM. And guys, I don't care what it's trading at. Right now it's trading at a PE below 4, and it's just, this to me is a stock I would run far, far, far away from. There is nothing about GM that tells me I want to own this stock long term. Now, maybe there's a trade there. I have no idea if there's a trade there or not, but I see no good reason to own GM stock, regardless, 52-week low, all-time low. Doesn't freaking matter. I don't see the point. Look at it right now. It's at a 52-week low, and yet it's got a dividend yield of like 1.3 or something like that. I mean, and you're at a 52-week low. So that shows you usually when you're down at a 52-week low, your dividend yield is actually pretty high. But it shows you how paltry that dividend is, which could be the only case I could kind of make for owning a stock like GM is, hey, maybe it's a dividend play there, but that's a terrible dividend. Heck, that's getting as bad as Apple. I'd much rather own Apple than GM at this stage. So for me, yeah, there's just nothing about this stock that I want to own. There's nothing about their financials that say this stock has a bright future ahead, and there's nothing that they have coming on the horizon that points to a brighter future ahead as well. So for me, this one can be at a 52-week low, all-time low. Doesn't matter. I still have no interest in buying this company. So stock number 2 would be Dollar General. And this stock had a phenomenal 2022, but quite frankly, it was extremely overvalued by the end of 2022. And it has continued to fall this year, really during a time where I thought they would actually thrive, where I thought they would do better than they would, given the fact that we are starting to see signs that the economy is slowing down. And obviously a lot of people slow down and kind of move down to Dollar General in regards to the shopping, but they are just struggling all the way around. And that right there is where, okay, great. The valuation is kind of getting back to a normal valuation there. I would agree with that. I'd say it's not significantly overvalued anymore. However, the question remains, why are they struggling as a business? And that's something for myself personally, management has not answered that question sufficiently enough for me to feel confident in investing and that they have a plan moving forward that they can execute to really turn this around, because they should be thriving from a numbers perspective right now, and they just aren't. So for me, when I look at Dollar General, this is one that I stay far, far, far away from, because hey, until management gives me something that I can really sink my teeth into and go, hey, it's a great plan, it's a great turnaround plan, and I like it, yeah, the valuation's okay. But man, I would not be surprised to see this one dip into significantly undervalued territory sometime in the future if management continues to not execute at the level that we think that they should. So stock number 3 is Pfizer, and it's another one that's just basically fallen off a cliff over the past year. And it is back down to basically a fair value, maybe even a little bit undervalued, depending upon how rich you want to value that stock. But for me, this is a stock that I personally am going to stay far, far away from. Even if it goes all the way down to significantly undervalued territory, I'm still going to stay far, far away, because this is an important lesson right here with the stock market, guys. And this is something I want you guys to understand. And I know you guys have heard me say it before, but it's worth reiterating right here. I don't invest outside of my circle of competence. I do not understand drug companies. I do not understand the approval process. I do not understand how to accurately project that. I do not know how to accurately project how that business model, when there's an approval, turns into bottom line dollars for the company. What's the timeline with all that? How is Wall Street going to treat it at the various stages through that journey? I don't understand any of that sort of stuff. So for me, I stay far, far away from a stock like Pfizer. And for a lot of you guys out there, maybe you guys understand drug companies very, very better. Maybe you work in the industry, whatever the case is. So you understand that there, but maybe there's another industry that you don't understand very well. And that right there is how you get caught. You end up investing in something to where you're applying rules for a different industry that may not necessarily apply over here to this industry, and you end up making mistakes. And I personally have done this time and time again, where I've invested in things that I don't understand, like a drug company, like a medical stock, for example, and I end up just in a lurch the entire time that I own it, because I can't tell if the stock's dipping. Am I getting a great deal and am I getting a discount so I can confidently buy? I understand it that whenever, heck, Apple or Meta or Tesla or one of those dips down, I understand those. So I understand that I'm getting a great deal and I'm not concerned at all with the dip. I'm loving the dip and I'm buying the dip hard. But with a drug company, I don't know if it's dipping because there's an actual problem there and I shouldn't be buying the dip. Think about a stock like Tattooed Chef last year, where you shouldn't have been buying the dip with that one. They were having problems, but I wouldn't know if a company like Pfizer's actually having business problems or not, because I just don't understand the business in the first place. So that right there is an important lesson for you to understand, that if it's outside your circle of competence, you just got to kind of move on. There are hundreds, if not 1,000 plus great stocks in the stock market for you to own that are right for you. You don't have to own them all, regardless of which one's on a great discount at the time or not. If it's outside that circle of competence, for me personally, I stay far, far away. So stock number 4 is Nordstrom. And guys, this is a luxury goods. Everybody knows what Nordstrom's is, right? I mean, we've all been in one at some point in time or another in our lives. And it's, high-end, high-end goods, high-end retail services. And those never do well during a slowdown. Now, we can argue how far the slowdown is going to come, but we know the economy is starting to slow, and the Fed is actively trying to slow the economy, despite the GDP numbers being ridiculous and all that sort of stuff. The point being, we all know that physical retail is suffering in general, and then obviously luxury goods at some point in time are going to suffer as well as the economy slows. So for me, I'm not sure we've seen the lowest of the low for Nordstrom. And then when I look at valuation, it's trading at a multiple of 75, which, guys, that's higher than Apple. That's higher than Tesla. That's higher than a lot of other companies that I would much rather own than Nordstrom's, an old style physical retailer. So for me, this is one, I don't see any way to purchase it one way or another right there. I think we have more room to fall. Now, do we fall now, or will we just trade flat for the next year or 2 years? I have no idea. But I just know I'm not paying a 75 for a stock like Nordstrom when there's so many other great stocks that have far better growth in the future where I can pay a lot less multiple for them. And on to the last stock here, and it's one that I don't think I've ever talked about on this channel. If I have, I don't remember. I may have used it as an example at some point in time, but I know I've never discussed the stock specifically here on this channel, and that would be Fisker. Look, guys, EVs are just in a tough spot right now, and if Tesla's struggling, you can imagine a company like Fisker that's just trying to get off the ground again is going to struggle as well, if not a lot worse. And this is kind of basically the same for all the EV players that haven't scaled out yet. They're all having problems scaling. It's incredibly hard. It's incredibly capital intensive, and they're burning through the cash like crazy, which of course a company in Fisker's position, and oh, by the way, they just readjusted their earnings announcement. They actually moved it forward to today. So we'll see exactly how that goes this afternoon, but that was a change. That's not always a good sign either, guys. It's not something you necessarily want to see. But the point being, they're all struggling with the same exact thing, which means they're going to have to raise capital again just to keep the lights on. And the worst scenario you can be in when you're going to raise capital is being at a 52-week low. That's an awful position to be in. What you want to be at is riding high, 52-week high, kind of like Tesla did when they were at their 52-week high the last time they raised. Then they're raising capital at a much higher price than they are at these lower prices, where they're going to have to dilute you even more than they normally would to get enough capital to continue to move forward. So a company like Fisker is absolutely a bankruptcy risk, to say the least. So you can't ignore it. You can't say, you're not rolling the dice, because you really are. Because unless they're able to raise capital, unless they're able to bring in an outside investor, which I don't know too many outside investors right now that want to put money into EVs at this stage, especially more of a luxury type EV, I don't know who out there is going to be willing to do that, which means dilution is coming, and they can only dilute so much at these low share prices before they basically end up having to go bankrupt and end up going under. So understand that. For me, I'm not interested in this stock at all, regardless of whether it's at a 52-week low or it gets even lower than that. I still have no interest. And if you want to see my watch list complete with price targets of stocks that I do want to buy, and you want to see those buys in real time, because I'm always actively buying, you want to take 5 courses for free, you want to use our stock analyzer tool completely for free, you want to be a part of the best 6, 7, and 8-figure Discord out there, and you want exclusive videos every week from me, you want to jump on our live Q&As, you want to slide into my DMs, and a ton more, make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.